So today, I had a trade that netted me $7,400 in less than 40 minutes. And in today's video, I'm going to fully break down and walk you through how I got my bias for the day, what I used to enter and exit the trade, how I manage the trade. That way you can get the same results in your trading. And maybe even eventually buy yourself one of these. Okay guys, here we are inside the charts. And as you can see, we're on ES on the daily time frame. Okay, so each one of these candles represents 1 day's worth of price action. And so here you can see on Monday, right, price opens up. So this is Monday's opening price. And so we're thinking about the weekly candle, right? We're thinking about the weekly candle power 3. So if we think we're gonna have a bearish week, right? And usually on Monday, I really don't have a real good idea on what the market wants to do. So I usually sit that day out. And so on Monday, right, what does Monday do? I'm really just watching. Monday opens up, comes up into this premium array, right? This bearish fair value gap that's in a premium. And how did I determine that's a premium array? Well, from this candle's high to this candle's low, right? We draw a fib out. This fair value gap, this bearish imbalance, is above the 50% of this range that we're working inside of, right? So that is what determines or makes this a premium array, right? And so look what happened on Monday, right? Let me get rid of these drawings, make it a little bit cleaner. Look what happened on Monday, right? It opens up, fills in this bearish imbalance, and then closes back below it right here. And so what that told me was, okay, that was a pretty bearish close on Monday. So if we're gonna go lower, right, I'm thinking about the weekly candle's power of 3. And if I pull up the weekly chart, you can see, right? Price opens up right here. That's the Monday open. Drives up into that daily imbalance that you can't see because we're on a weekly chart. But you can see it drives up, fills it in, and we've expanded lower the rest of the week, right? So we had that manipulation early on in the week right here with this candle designated by this wick right here. And then we had the bulk of the move to the downside. And so I was really looking to capture some kind of move that aligned with that power of 3, right? And so I didn't trade Monday. I waited, right? I looked at the economic calendar. I said, all right, well, no news Monday. Really is no high impact news. We had a couple things on Tuesday, right? And then Wednesday, we had unemployment claims, and then we had the FOMC meeting minutes. And the market really just chopped most of Wednesday right here. You can see on this doji. Market really just chopped all day, and everyone thought it was going to move after the minutes. It really didn't. It just kind of chopped. So also Thursday, that was a national day of mourning for President Jimmy Carter, who passed away. And so we really didn't have a lot of action middle of the week right here. And so I kind of wanted to just focus on Friday, because by the end of the week, you pretty much have a good idea of where that that weekly candle is going to expand. All right. And so we had clear draw on liquidity by the time Friday came around, right? We saw the bearish close on Monday, the early manipulation early on in the week. And then we saw that power 3 kind of playing out throughout the week. So for me, Friday was a no-brainer short because we had these equal lows down here, right? These relative equal lows, a lot of sell side liquidity built up down there. And so that's kind of how I got my bias for the day, right? Or even just for the week. So let's go ahead and let's pop down, right, to a 4-hour and maybe even pop down to a 1-hour, right? Because I usually have my charts like this. I usually have the 1 hour here. I'm mostly staring at this. I have the daily up here, right? I can make this bigger. I have the daily up here. And then I also have the 4-hour down here. And so as I cycle down the time frames, I'll kind of, maybe if I'm trading on a 5-minute, I'll put this on the 15 and I'll put this on the 30 or the 1 hour. So that's basically what I'm doing, right? But let's go ahead and let's focus on the 1 hour chart here, right? So we have these equal lows marked out by this line right here. So there's sell side liquidity resting below those lows. And what I really was waiting for in the morning was this, right? If we mark out this range low and this high, right? A lot of low resistance liquidity up here. And so I really thought that we might manipulate, right? Because you can see if we zoom in here, I really thought, and here's the beginning of the daily candle for, boom, right there, the daily candle for Friday, right? So I really thought early on price is going to open up and eventually get up above all this low resistance liquidity. And that's kind of what I was waiting for before, that news came out, right? Or this big drop here. Remember, we had news at 8:30, right? Non-farm NFP week, non-farm employment change. We had news, right? So what I really wanted to see was the news manipulate price higher to take it lower into these equal lows down here, and eventually, right, into these equal lows right here. But we didn't get that, right? It just dropped straight down and closed below on the 1 hour. And so I said, okay, well, maybe price is just really weak, right? And we are just going to go ahead and go straight down to those lows. And I didn't see a setup at all, right? If we move down another time frame, I didn't see really any kind of setup I was comfortable with going into 9:30 open, right? 9:30 comes around right here. There's a 15-minute chart. 9:30 opens here. Yes, we dug up into this imbalance here, right? And just dumped. But I didn't really see anything that I was comfortable taking during this dump. And so what I did was I waited, right? I waited for price to come down, hit these relative equal lows. Let me go ahead and mark that out so we're not confused. I waited for price to come down and hit these relative equal lows. And I saw a bounce off that level. Let's get down to a 5-minute here, and we'll put the 15-minute here, and we'll put the 1 hour here. How about that? There we go. And so what I saw was we hit this level, purged liquidity, and created a nice swing low and bounced, right? But in my mind, okay, it's a 5-minute chart, 15-minute right here. We didn't see any kind of market structure shift, right, on a higher time frame, like the 1 hour, the 15-minute, or even the 5-minute, right? There was no swing high put in down here that got me looking long, right? We're still in bearish institutional order flow, right? We're still in that bearish order flow. And so when I saw, I actually was looking at the 30-minute as well as the 15-minute here, right? We have little 15-minute for value gaps up here, but I was really more interested in a 30-minute, right? There's actually just one 30-minute for value gap right here that I was interested in. So I had that marked out. And if you follow me on Instagram, you'll know that you saw that on my chart, right? When I uploaded my story, when I took profits down here. And so I got the short from this move right here, from this reversal right here. So we're rebalancing this imbalance, come up, hit this 30-minute imbalance right here, and then we head lower, right? Wick off that and head lower and take out and make a new low of day. Make this bigger. And so when I saw that, right, there was no reason for me to get bullish yet because we still hadn't had a market structure shift to the upside. And so in my head, I'm like, okay, well, I'm not going to fight this trend. We just dropped super hard. I don't think we're going to get back up here. So the best thing to do in that position is just to follow the bearish order flow, right? And so if I log into my broker, I'll show you my statements or my executions here. My TradeStation account, we're on live. Log in. And so you can see, right? Live account, realized P&L, about $7,400. And if I cut my executions on, right, you can see. So that's basically what I saw, right? To keep my bearish bias for the day. And let's go ahead and let's break down how I entered the trade, right? So right away, I saw we had created this swing high right here, the short-term swing high. And so when price came up on this candle right here, this up close candle, and closed above it, and then immediately came back in this range, right? Immediately came back inside this range. I said, okay, I like that, right? I like this purge of this high, and immediate close back inside this range. And not only did it close back inside the range, but it actually closed, get rid of these executions, it actually closed back below the opening price of this candle, validating it as a bearish order block, okay? And so all I did was, once I told myself, all right, we have a nice little purge of a swing high here, hitting this 30-minute imbalance, right? You can label that 30-minute FEG. And not only did we hit it, right, we closed below it, but also we didn't even get into the upper half of it either. So I always like drawing these midlines out inside the fair value gaps as well, right? Just to kind of get a gauge on how bearish are we, right? It gives me extra confidence. So right when price closed below this opening price of this up close candle, I said, you know what? I'm just going to market order short. And so when this candle opened, kind of drove up, hit the low, right, of this candle, I just marketed in 8 contracts right there on ES. And my stop, right? Stop was above this high. And I was actually aiming for this low for first partial. And you can see I got that. Not necessarily a 2R, right? Wasn't a full 2R trade, but my plan was to keep taking partials as price went lower, right? And you can see we actually didn't get that. And so I'm going to go through and show you how I managed it. So I was going to take partials here. I was going to take half off, which I did, right? Took off 4 there, you can see. And then I was going to try and take more off at 3R down here, just to fix 3R. I was going to take 3 off and have 1 runner remaining, right? So I have 8 contracts, sold 4 down here for about $5,000. And then I trailed my stop right here above this high and got stopped out, right? So you can see that right there. Got stopped out. Boom. But what kept me confident, right, when it started chopping right here, and I didn't hop out earlier, I waited for my price target to get hit before I moved my stop or anything like that, was this fair value gap on the 5 minute, right? We were respecting that here and here, here and here, and then went lower, and that's what propelled price lower to get my first partials off. And then I trailed my stop a break above this high originally, right? So that is what I saw to get bearish. That's how I entered the trade. That's how I exited. And that's how I got stopped out on the remaining portion. So all in all, wasn't even a 2R trade, right? But I still made about $7,400, as you can see down here. All right, guys, what I want to do is end the video on this. Keep your approach as simple as possible. The simpler it is, the easier it is to execute on consistently. I can't stress that enough. The more bare bones it is, right, the less moving parts, the easier it is to execute consistently, especially on the lower time frames. We're gonna have to make quick decisions in a matter of maybe even seconds, right? Depending on what time frame you're trading. It could be the minute, the 15-second, whatever. Keep it as simple as possible, right? It's gonna make it a lot easier to execute. So if you found this video helpful, what I want you to do is share it with somebody else who might find value from it, and I'll see you guys in the next one.